is fine. That's okay. Things are going to be okay.
All right, so let's get into an issue that came up. It talks about the fact that $3.9 billion worth of funds were lost in crypto this year. And basically I said, okay, well, that's an interesting number. It details out the number of dollars lost, or the value of the coins that were lost at the time they were lost, of 3.9 billion that were stolen by hackers. Hackers, yes, are a major source of irritation. And what you'll notice is if you look deep into these reports, yes, that amount of money was lost, and it was lost to hackers. You'll find that it's not Bitcoin being stolen, and that it is the coins that are involved in smart contracts in the distributed finance or centralized finance space. Those two, the distributed finance and centralized finance space, literally they are the ones that have the smart contracts and the automatic transactions happening. And you're right, Justin, no theft of Bitcoin on cold storage, that's for sure. A cold wallet is the absolute best security you can have. But what's happening is the DeFi space and the centralized finance space, they both have to harden their applications so that they can stop letting the fraudsters in and the hackers in, because those hackers they're just walking away with dollars. And it was really, really bad this last year. It's almost double what it was the previous year. But I would venture to say that the problem is worse than this. And here's why. If we go and we actually look at the document, this is the actual document that the block put out, and they talk about the crypto losses report. So you can get the actual text of the document if you want to go look for it there. But let's look at another area though. If we look at bankruptcies this year that have lost crypto funds, we have 5 large ones. We have Voyager Digital, we have FTX and Alameda Research, we have Three Arrows, we have Celsius. All of those were considered either crypto banks, or they were considered custodial exchanges, or more venture capital type of businesses. FTX was an exchange, Voyager Digital and Three Arrows were considered venture capital firms, and Celsius would kind of go into both categories a little bit. Terra Luna completely fell apart when confidence was lost in the Luna. So billions of dollars were lost in this space. And the problem with that, if you go take a look at it, here's information about the FTX bankruptcy. And right now, the bankruptcy lawyers and the bankruptcy judge and all the people involved with that, and the new CEO that the judge appointed to be head of FTX while it's being sorted out, they say they've recovered $5 billion. Well, that's a tip of the iceberg, because 3.9 billion was just in the top investors in FTX. So they had over 1,000 investors that were less than those top 50. And those top 50, those beyond that amounted to several $billion more than those top 50. So they've hunted down $5 billion. Well, they're scraping a lot of SBF's or Sam Bankman-Fried's accounts, trying to find that money, trying to get a hold of the real estate assets that he bought with the money, and do all of those things to try to get their money back. See, the problem is there's a lot of fraud and graft in the cryptocurrency space. And a lot of that fraud is, of course, the visible stuff, which is hackers. The part that's not so visible until the market takes a nosedive like it did in 2022, where it went from a high, Bitcoin went from a high of 16,000 down to, I think it hit back up to 20,000 just this last week. When it takes a nosedive like that, companies that are doing a Ponzi scheme like FTX find that they don't have any place to hide anymore. They can't just still allow people to deposit money and then they can spend it and or give it to other depositors that are asking for their money back. When markets are good and they're going up, they work just fine. But when they start to go down, all the Ponzi schemes and the things that the companies that are not being run well start to go into the tank and end up in bankruptcy court. Even good, solidly run companies such as Coinbase have had to announce layoffs and slimming down, like most companies do when they're facing a downturn. But the well-run companies will weather through it because it's not the value of the coins themselves that are driving their profits. It's the work that those companies are doing for and in behalf of their clients who are investing, instead of counting on money coming in from the investors that they can use in their own pocketbooks and to pay their wages. Quite a difference there. They need to be working on the fees and the services they provide and not off the people's money. And that's the whole point. So while it was good that Immunify identified good hackers that have taken money away and the amount of money there, the hole that was put in the crypto space was a lot bigger than that, simply because of the bankruptcies. And frankly, the lack of confidence that companies or people like FTX have created because of what they did to their customers is really challenged a lot of crypto investors, and just a lot of them have just pulled out.